Welcome back to Trading 360. I'm Nicole Petallides, live at the New York Stock Exchange. The big three stocks, three charts, three trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Scott Bauer, CEO of Prosper Trading Academy in person. Good to see you both. Thank you for being here. So how about a big picture market thought? I mean, they just were saying about the November panic and things have turned off the rally. I mean, what's your big picture thought? How are you feeling about the market?
I feel okay. I'm not overwhelmed, quite frankly, because I still think we have some headwinds. A lot of people got caught short. Let's call a spade a spade. A lot of people got caught short over the last couple weeks as Powell maybe flip-flopped a little bit and the rhetoric went from higher for longer to kind of we're done. So that's obviously a good thing. We are coming into, or we are really in a seasonally strong time for the marketplace, but I still think there's a lot of headwinds, Nicole, because even though the eco data has been coming in much weaker, which the market wants to see, at some point the reality is going to set in that weaker eco data is not necessarily a great thing. I'm also very concerned about all the consumer debt that's being racked up. But short term for the market, I do think there are some tailwinds. We could probably grind out a little bit higher going into the end of the year. And
we always talk about the Santa Claus rally, and sometimes, it's a time where the market does go higher. And as for the consumer debt, I mean, the last I saw, we were up to nearly 1.1 trillion in debt, and the 90-day delinquencies are going back to, I guess, a more normal level, but they're higher than what they've been over the last year or so. That being said, let's take a look at Palantir, which actually had strong numbers last week. This month, it's up 31%. So what are your thoughts on a name like Palantir at $19 today?
It's made a heck of a comeback from where it was, and it also crashed down pretty hard. But you're right. The last earnings report, pretty decent. The problem that they had was, they had weak profitability going into the last report. And now all of a sudden, they're on the green side, and they're predicting that they are going to remain profitable here through the end of the year. And so, I think that we can get a nice breakout to the upside here. I know we're down a little bit today. The 21 level for me is really critical, looking at a technical standpoint here. And if we can break out above 21, I think there's a lot of room to go. So right now, I'm just buying January 21 calls outright. Pay about $1.25 or so for those. If the stock does break out, I'll look to hedge those.
All right. Ben Lichtenstein, your thoughts, please, on the charts.
Sure thing, Nicole. We are definitely knocking on the door of that 21 level that Scott just pointed to, and we're seeing some momentum to the upside in this trend environment that we've been watching. Recent strength here after earnings from 14 back up into and just shy of $20. Let's dive right into the chart here. First and foremost, a more granular time frame. Just wanted to look at the big move up in reaction to earnings, and this is something we're going to talk a lot about here today. The high conviction trade that you see in reaction to a news catalyst, and then the sideways consolidation as the market accepts that new upper level. So you can see a high conviction, higher highs, higher lows, a initiative move to the upside, the imbalance the news creates, and then you can see this overlapping rotational price activity as the market forms value and basically establishes a new upper level. In this instance, I went ahead and identified some of the areas of consolidation that have formed along the way up, so we can see that, well, we have a few, these kind of footprints that the market leaves us here. Currently balancing around 20. You can see the momentum associated with this as long as we hold above 1850. Scott, I think that $21 level that you've got your eye in is definitely well within sights here. Taking a look here as we step back away from the 30-minute candle chart here, I just want to distance ourselves a little bit and show an identical pattern as we take a look here. And we're going all the way back to March now, right? Not just the last week or so of data. You can see this is the last few months of price activity, 750. High conviction move to the upside, sideways consolidation, balancing around 17 in this time frame. You've got a very well-defined top up here that, again, should you take out 2039, that key area, that double top, it would seem like the momentum in this bull trend would get you right up into that level. I wanted to show you how I was actually dialed in on 24 right now. I think that's going to be the next hurdle for the bulls, but I wanted to show you that we were in a downtrend, and this move that we just just looked at, the rally invalidated that. So this is exactly what the bulls wanted to see, Nicole. As we came off this $8 level, you can see the key point in that downtrend engaging, if we were seeing follow through, was right around 12. And look what happened. We took it out. Here's that range that we've been talking about that we're holding right now. And again, for me, I'm seeing a very bullish pattern here. We're bottoming out, momentum to the upside. I agree with Scott in terms of 21, but I'd be watching 24 even more significantly, I think. You can see the importance of that in terms of the range that we established as we were basically in that range right around 24 all of 2021.
Yeah, I mean, I love that you're both on the same page on this idea.
Doesn't happen all the time.
Yeah, and look, and we always say that's what makes the market, right? I mean, traders have different ideas. But in this case, you seem to be on the same page. He's even a little more bullish than you are at this time. Final thoughts here on Palantir.
I agree. When you look at those technicals, it has been in a nice upward trajectory. But, that 21 is going to be a very, very critical point. If it does break through there, as Ben said, 24, and I think it can go higher than that.
Wow. Okay. And I will say, as you say, that it will go. You think it could go higher than that. Yesterday, I had a great conversation with Dan Ives, and he talked about both the names that you're discussing today. Palantir, he called the golden child of AI.
Wow.
And I mean, he just loves it. And then for Palo Alto, he thought the risk reward was okay. He likes it for the longer term, but ahead of those earnings that we got last night, and you're seeing Palo Alto down 5% today.
Yep.
He was on point with that, just having a little bit of apprehension in the near term. Your thoughts on Palo Alto today?
I agree on his points on Palo Alto, and watching that report and watching what the stock did after hours last night, that traded down another 5% from here. So it traded down right around to 220, 222, right about that 200-day moving average, and bounced pretty quickly. Now all day today, it's hovering right around the 240-ish mark. So I'm glad that, it took a little bit of a haircut, because I do like this stock, and it was a little bit rich up around, 275 or so.
Gives opportunity to folks maybe, right?
Yeah, absolutely. So it's hovering in an area technically right now, Nicole, that we're right at about the 50-day moving average. I think it can hold here. I'm actually bullish from this point forward here. And as you said, it gives folks an opportunity to maybe get in a little bit cheaper here. So I'm going out about 2 months, and I'm buying a pretty wide call spread. The January 250, 270 call spread. I can do that somewhere around $5.50 or so, and it gives the time in this spread, it gives time for the stock to make a recovery back. This is not something that's going to pop overnight, but I've got 60 days or so here for the stock to grind its way back, and I think there's a good likelihood of that.
And I see some reports from the analysts. Wells Fargo raised their price target, 280 from 270, overweight. JP Morgan went up $4 to 272 from 268, overweight. RBC, 281 on that price target there, and Wedbush has a 290 target. So a lot of believers in this name. Ben?
Well, I can see why the technicals are stacking up and feeding into that bullish stance that Scott's taking on this one. And he mentioned we've taken a haircut as of recent. This has us right back to a key area where I think the longer-term bulls could be looking to get involved. Take a look here. First and foremost, similarly to what we were talking about in terms of Palantir, high conviction to the upside in reaction to earnings, sideways consolidation, and you can see that we've actually come off a bit here, but notice where we've gotten right back down to this key area that we've found support in the past. Again, we're talking right around this $225, $230 level, but I wanted to just show you, again, my eyes drawn to the 2 phases of development here, and I think it's important. We're looking at a 4-hour candle chart here, so we're going all the way back to the middle of August. Again, earnings, that imbalance, higher highs, higher lows, the initiative move up, and then you lose that conviction, you get a lot more overlapping and rotational, but you've got a well-defined range here, and what we're looking at here, if you're bullish, is you want to try and find opportunity near the lower extreme of that range, right? A failed attempt to break out to the downside ultimately. Build momentum through the middle of the range, well, you open up a door for a retest of that upper extreme, and we see this pattern play out multiple times. No real way to determine how long we will see this horizontal development play out, but the reason I'm leaning on the bullish pattern here and that take is because, well, here you can see now going all the way back to the beginning of May. Similar pattern, right? High conviction to the upside, sideways consolidation, a very bullish bullish type stance here again in looking at the daily candles, but one more step back and you can see exactly why. This adds a little time onto the chart. Again, we're dealing with daily candles here, but you're talking about the spring of 2020, areas of consolidation that formed at higher and higher levels. Now, we did see that blip on the radar where price came off, if you remember, this summer down to, we'll call it 200, 210, 220 area, but I'm just focused on this longer term trend to the upside, the fact that we're balancing around 245 again. Further momentum up and through here. Nicole opens up a door for a retest of that 265 level. The bulls want to break out here, a new area of consolidation to form at a higher level. That solidifies the working assumption that we are in a trend up here. It's pretty well defined, though, in this instance, sometimes more so than others, but this is a textbook example thereof.
And so that's in your favor as well. And the question, too, is whether or not tech is back in a big way, right? Because in the first part of the year, tech was really the way to go, and then it sort of faltered. Final thoughts here on this one.
It's real interesting because with all of the cybersecurity risks that are out there, you would think that Palo Alto, other stocks in the sector, would have had some really, really nice earnings, good guidance. This one was tempered a little bit, which I really think gives the opportunity for that future growth.
Okay, last but not least, as we take a look at ARM, obviously it was exciting when it was an IPO. Has been less exciting since.
Disappointing.
Yeah. And, and look, we've had a great IPO market this year. People are happy that it's reopened, I guess, from 69 down to 46. Right now, today at 53. Your thoughts? It's been a very busy couple of months.
It has been a very busy couple of months. This one might be a little bit controversial. I'm not sure where Ben stands. They reported weak third quarter guidance. That was disappointing for everyone. Obviously, there's the issues with the administration and the issue with exporting AI chips to China. However, China is about 20% of their marketplace. They actually made money. They did well, or excuse me, they actually grew their business with China on the last quarter. So I think if we can get behind that, put that behind us a little bit here, and the fact that the stock recovered a little bit off of those earnings, it's hovering here, certainly disappointing off of that IPO. I really think this is one that has the potential for a big breakout to the upside. I really do, and maybe, just maybe, get back to those IPO, highs, or at least in the mid to high 60s. So 55 is critical for me. If we can break out past 55 here, that's where I'm going to pivot. So again, I'm going out to January. I'm buying the January 55-65 call spread. Can do that for about $2.50. My risk is limited. I'm looking for a breakout.
He's a believer. He's a believer in ARM. Your thoughts, Ben Lichtenstein?
55 is critical here, Scott, at this point. It's a pivot area, the range that we've been in as we've balanced out this week. We saw a similar pattern. High conviction to the upside, but we've sort of lost momentum here, and I'm going to show you why. I think it's important when we step away and look at the bigger picture. First and foremost, though, identical pattern in terms of the other two names we just looked at, a very bullish depiction in terms of price activity, and a very one that exhibits high conviction to the upside. And we're also accepting this upper level. So again, I do want to point to the fact that this is the, Scott pointed out 55 and how that was significant, but this is a 5-minute candle chart, right? So we don't want to put too much weight into this. We just wanted to establish here that in the more short-term time frame, we do have a trend up. Now, taking a step back, you can see over the last couple weeks, similar pattern. High conviction, sideways consolidation. So again, we've looked at a 5-minute candle chart. We've now got an hourly candle chart here in both of these instances. You can see the significance. I've got 53. We'll call it 53, 55-ish. It's still important here, but let's step one more time back here, and I'm going to show you what's going on, because you guys mentioned since the IPO the stock's been coming under pressure, and what has me a bit concerned here, Scott, I'll give it to you. If we do get a breakout here, because of the fact that we've tested a couple times and failed, we could see some energy, that's for sure. 55, 56, the key area to watch right now. We're holding above 52, but starting to roll over. What has me a bit uneasy here, should we take out 52, ultimately open up a door for a retest of 46. That's in line with the trend lower we're seeing. Basically, this longer-term chart, guys, a mirror image of what we've been looking at here today. Again, normally we've been talking about that high conviction, the upside, sideways consolidation. Here you can see we flipped the tables a bit, and again, just recently coming off some resistance. It's a big area up here, that's for sure, but it looks like we just stalled out and failed.
Okay, we'll leave it there. Ben Lichtenstein, thank you on the charts there. Final thoughts, Scott Bauer, live from New York.
Overall in the market, I'm cautiously optimistic. I think near term, rallying into the end of the year, but I do think longer term, there are some issues, there are some headwinds that this market is going to have to face. And it'll be interesting to see how interest rates actually move without the Fed doing anything. They're not going to move rates in December. The likelihood is they're not moving anytime in early, 2024, and that they're more than likely it's priced in that they're going to cut rates. So has the rally we've seen because of that, is it more of a relief rally where it's like a buy the news, sell the, buy the rumor, sell the news sort of, situation, or can we sustain this? So I'm cautiously optimistic.
Okay, Scott Bauer, thank you for being here in person.
Thank you.
Enjoy your New York time. CEO of Prosper Trading Academy, Scott Bauer.